We have our next company here, Astronics. So now I'd like to introduce Peter Gundermann, Chief Executive Officer, and Nancy Hedges, Chief Financial Officer. They'll be joining us virtually. Astronics provides advanced technologies to the global aerospace, defense, and electronic industries, offering products such as electrical power systems, lighting and safety systems, avionics, aircraft structures, automated test systems, and FAA Organization Designation Authorization Services. Its two segments are Aerospace, which designs and manufactures products for the aerospace and defense industry, and Test Systems, which develops and maintains automated test systems and training and simulation devices for aerospace, defense, communications, and mass transit markets. Astronics has about 43 million shares outstanding for a market cap of around 1.6 billion. Maybe could we just start with a brief overview of Astronics and maybe just a history of the company?
Sure. Well, I thought your intro covered pretty much everything we do, but we're primarily an aerospace company. As you said, we report in two segments, 90% aerospace. We have a much smaller test segment, approximately 10% of our revenue. We are primarily a commercial transport. We're heavily exposed to the commercial transport market. This pie chart on the right shows you that approximately 70% of our revenue these days is to the commercial transport market, and then we have smaller portions for military aircraft and business jet. That big exposure to commercial transport explains the journey that we went on through the pandemic. We got hit really hard. This chart shows you revenues on the left side, in particular, 773 million before the pandemic hit. We went down to 445. Since then, we've come roaring right back, and it's a little bit of whiplash because, you know, not too long ago, we were facing a whole series of headwinds, everything from supply chain and inflation and worker churn and travel shutdowns. Now everything seems to be turning to a tailwind, and we have great momentum in the business. And bookings have kept right up. We have a pretty strong backlog, like a near record high, as we exited the second quarter and entered into the third quarter. So there's a lot of momentum. I would imagine most attendees at your conference are aware of that. I don't have to go through all the things that are going right, but a lot of strength in the industry and in our company. This chart probably tells you it's most helpful in understanding what we do in the industry. We have four strategic thrusts, as we call them, or maybe verticals is another name. Approximately half our business is in the in-flight entertainment and connectivity space. So passengers riding around in the cabin of commercial airplanes want to plug in their devices. That's for charging. That's probably our power system. If they want to stream content, those are probably our wireless access points. If they want to watch a movie that's cached on a server on the airplane, that's could be our server. If you want to go off airplane for connectivity, we have a range of products that are involved in that space. And it's an exciting space for us. We have a very unique position, a very broad product line, and it's a place that's very dynamic. A lot of evolution and technology change, which gives us great retrofit opportunities to replace ourselves, basically, in many cases, as the personal electronics world, evolves. About a quarter of our business is lighting related. We're actually one of the world's bigger aircraft lighting companies. We do everything from passenger service units like reading lights in 737 to cockpit systems, through avionics companies like Collins, to exterior lighting systems like on the Lockheed F-35. Active in all parts of aerospace, a big part of our business. Primarily line fit, not so much retrofit. In the upper left corner, a much smaller product line, but a very exciting one from my perspective, is flight critical electrical power. This is not the passenger amenity. This is the critical electrical system that drives certain aircraft, especially smaller aircraft, which is where we specialize. We have certain key technologies that, like electronic circuit breakers and very high life spinning machines that are based on induction and permanent magnets. And this is one that is a smaller part of our business now, but I expect has a lot of growth potential. If you think of small aircraft, certainly there are small business jets. There's the Pilatus PC-24. There's the upcoming Textron Denali. There's a few others. There also is a world of drones out there on the military side. Think of CCA aircraft. Those are small aircraft. They want advanced, remotely controllable electrical power systems. That's what we do. Also eVTOL, and there's a wide world of possible outcomes with the current crop of eVTOL aircraft being developed. We're active on many of them, most of them. And then most notably, there's the FLRAA airplane, the Bell V-280, which is, we're doing the entire electrical distribution system on that airplane. It promises to be one of the biggest programs in our company's history. Obviously depending on how that program matures and goes through, gets into high volume production. And then our fourth vertical is the test vertical. It's 10% of our business. It's, most investors think of us as an aerospace company. We act and think like an aerospace company, but we do have this test business. And it has some promising prospects ahead of it, but we've had a difficult time recently. We think we've got it cleaned up and under control, and it'll be a positive contributor from this point going forward, and potentially based on a significant contract with the U.S. Army should be a big contributor as we round the corner and get into 2026. So that's a very short, brief overview of who we are and what we do.
Yeah, that was a great overview. Maybe just to dive in, we could talk a little bit more about the backlog. You mentioned it's at record highs, and just what's driving that, and I guess what are the supply-demand dynamics in the market today?
It's just a strong picture of demand, across the spectrum. More airplanes flying, more airplanes being built, more people flying. It's all a good combination for us. But if I tick off the big things that we're excited about, obviously aircraft production rates are getting stronger. 737 has historically been one of our biggest programs. We're operating at about 30, 32 ships a month right now, chewing down a little bit of inventory. We expect to be pretty much 1-for-1 with Boeing's production rate in the second half by the end of this year for sure. And they're publicly planning to get to 42 a month as early as October, and they recently released the Skyline report that has them getting to 82 a month in early 2028. That's very strong growth for us. A320 is also very important to us. We don't put as much product on an A320 as we do on a 737, but they build a lot more of them. Similarly going from low 50s to high 70s over that time frame. And then both Boeing and Airbus approximately doubling their rate of wide bodies, 787 and A350. Those are very important programs for us also. So the aircraft production tailwind is very strong for us, and we are pleased with what we see out of Boeing these days. You didn't ask this question specifically, but I think we're part of that industry that appreciates what they've done in terms of righting the ship and improving the culture. It's from our perspective pretty significant and pretty notable. And then, you know, the range of small aircraft developing or using our electrical power system, I kind of touched on a lot of it. A lot of that is not reflected in backlog at this point, but we think indicates or suggests pretty strong growth potential in the near term across a wide range. And that radio test program for the U.S. Army also, one of the things I'm excited about is while we're 70% exposed to commercial transport right now, I can see us becoming a little bit more balanced as time goes on, as some of those military aircraft get into production, as the radio test program starts getting into production early in 2026. You know, we should have a more reasonable balance and be more in line with how most public companies are in the aerospace space. The other final thing I'd say about bookings and backlog, you know, we're expecting to do about $850 million or so this year. We have a backlog that's a near record up around 650. The last time before the pandemic, when we were in this neighborhood for revenue, our backlog we were working with was around 420 or so. So we're doing about the same volume. Our backlog's 50% higher. We think that's a very positive indication for continued growth as we go down the road here.
Excellent. Yeah, it seems like there's a tremendous opportunity on the OE side. And then just on the retrofit side, I guess what kind of demand are you seeing from airlines?
We're seeing a lot of demand. In fact, if you look at our growth over the last few years, a lot of that has been driven by retrofit. We tend to say that half of our commercial transport sales, so half of that 70% that we were talking about, is line fit, half approximately is retrofit. Not spares and repairs, but retrofit. And the driver there is the continual evolution of consumer electronics and the devices that people are bringing on airplanes with them, like personal computers or notepads or phones or whatever. That, you know, that industry has very short life cycles and adopts new technologies very quickly. And people want to be able to use those capabilities and technologies when they get on commercial airplanes. That means that commercial airlines are constantly under pressure to recognize the trends in consumer electronics and upgrade their airplanes accordingly. So, you know, whereas pick a technology, a braking system on an airplane, once that airplane's certified, that brake system tends not to change a whole lot over what could be a 20, 30-year production run. We, on the other hand, in that you know, in-flight entertainment and connectivity space, constantly get the opportunity to replace and upgrade ourselves because the technology changes so quickly. So we have a lot of examples of that, and as in-flight entertainment and connectivity becomes more and more mainstream, those retrofit opportunities become more constant and more of a reliable source of revenue for us. So as we look forward, you know, we have the uptick in production rates, which is great. And the more airplanes are out there with in-flight entertainment and connectivity content, there's a constant opportunity to upgrade those also. So we do work with a couple hundred airlines around the world directly. We do work with the in-flight entertainment companies. The big ones are Panasonic, Thales, and Safran. And we do work with a full range of connectivity companies. So think of the Viasats and the Inmarsats and the Intelsats and the SESs of the world. We're kind of in the middle of that mix, and it's constantly moving, and it creates a lot of opportunities for us.
Definitely, it sounds like it. I wanted to touch on something you mentioned about, you know, Astronics' line fit status. Maybe just talk about how the difficulties with winning that and the barriers that creates for you guys.
Well, winning a line fit position is not the easiest thing in the world to do. We think over the years, though, that we've established ourselves at the two major OEMs, both Boeing and Airbus, as a trusted partner. And with the consolidation that's gone on in the industry, it feels to us that they're giving us more and more of a look and stronger consideration when they're, picking partners for new projects or for upgrades to existing systems. And I can point to a couple of examples there. Airbus picked us to do a pretty nice part of the program for the A220, the old Bombardier program that they bought, and they're upgrading it to Airbus standards. And it's the first time that Airbus has allowed us to do that kind of program, and it's being very well received, and we think may well lead to other opportunities in Hamburg or Toulouse. Airbus knows us very well as an IFE company because we work with a lot of the airlines, and the airlines have us ship product to Airbus. Airbus has to make us offerable. But as part of all that experience, we're gaining a lot of credibility with them, and it's the same thing with Boeing. So we think that, they're viewing us as a growth supplier, and as they both look to ramp, they are evaluating their supply chains, and when they find areas that they think we might be able to help in terms of capacity or quality or both, they're giving us a good look. So we're pretty encouraged that as their ramp goes on, we're going to get more attention, not less.
I'd like to just pivot to military, which you touched on, double-digit growth. Maybe you could talk about the opportunities there, and the biggest one, it seems like, is FLRAA. So you could go into detail with that as well.
Yeah, we've been on military airplanes for a long, long time. Our perspective is that a lot of what works on a commercial airplane or a business jet also is needed on a military airplane, not IFE, obviously, hopefully, but a lot of the lighting, and a lot of the flight critical electrical power. So in the lighting world, we've basically been on every military airplane that flies over the last 30, 40 years, but it's been a relatively low shipset content. As we've gotten bigger and as our capabilities have improved, the products that we can offer have evolved accordingly. And it's really culminated in the V280. And I assume that your audience there is very familiar with that program. I don't need to describe what it is. What I can tell you is that we have been a long-term partner with Bell. We started working with them in the electrical power area on the 525 helicopter. We then went to the 505 helicopter and basically became a trusted partner. And they, in my opinion, view us as their primary provider of electrical systems. When they got into FARA and they got into FLRAA, we were right there with them. FARA obviously went away. FLRAA's, from what we can see, full speed ahead, and then some. And our shipset content is still under some consideration and negotiation with some trade studies that are ongoing, so it's not all nailed down yet, but we think it's going to be in the range of about $1 million an aircraft. And that for us would be by far probably 2x the biggest content, shipset content, standard shipset content that we put on any airplane ever. So, from a company size perspective, we're kind of punching above our weight on that program. It's going to take a little while to get into production, but if it goes anywhere near what most people expect it will, it'll be a very significant program for our company.
Yeah, definitely sounds like a large opportunity. I'd like to just touch on the recent acquisition you announced with Envoy Aerospace. Maybe you could just talk about some of the opportunities there.
It's really a capability play. Envoy is an ODA. We do a lot of cabin modification work, primarily with IFE, but other things too. An airline that wants to change its cabin configuration, maybe change seats or change bins or change a galley. Excuse me. We do that kind of work. We do the engineering, but then you got to go out somewhere else to get the thing approved, either to the FAA directly or to an ODA. And by buying Envoy, we basically insource that capability. That gives us the opportunity to more efficiently manage our own programs, remove the friction that would come with the requirement to go outside for FAA approval. We can now do that internally. We think that gives our customers better confidence in our ability to execute to schedule, and just basically removes friction from the process. So it's a capability that we're adding. It's not a big company. It's $5 million in sales, so it's not that we're looking for. It was the opportunity to basically approve our own work.
And turning to the test segment, I guess maybe you could talk about some of the headwinds you've seen there, and then the opportunity on the Army contract.
Sure. So our test segment's been a little bit of a journey. Before the pandemic, we sold a semiconductor test product line to a company called Advantest. That was a $135 million sale. And we repositioned the company to look at two primary areas. One was a transit testing subway systems, basically. The other one was testing radios for militaries and government agencies like first responders, police forces, border security, things like that. And we've had some success winning programs. On the transit side, we won a program with New York City that was a $30 million program in 2019, and in Atlanta, a $25 million program about that same time frame. And on the radio test side, we were announced the winner of this Army radio program in particular. There are a couple others, but the big one is this Army radio program, which is a $215 million to start IDIQ. They've both been much slower than we anticipated. The transit programs have been particularly painful. We've had some real learning experiences there. But we think we have a really good product line going forward. The challenge going forward is that most municipal authorities are under financial duress, primarily from work from home. Most major cities have ridership issues. It's down. Funding's a challenge. If you have your eye open for it, you see these stories fairly frequently in the news. We think that that's going to get better as people resume going into the office more regularly and transit authorities get funding. They are critical to how our cities work. And the authorities who have seen the products we've developed are very excited about it. So we think that'll work. We just got to survive through the difficult times here that we've been kind of living in. The radio test for the Army similarly has been very slow. The Army has hundreds of thousands of radios in 26 families, and they want a single tester to be able to test the 26 families of radios. And they named us the winning developer of that system a couple of years ago. Since then, we've been working through all the stuff you got to work through to get into production. They have awarded a $215 million IDIQ, which is supposed to last for 4 or 5 years. Once we get going, we expect to get going in January or February. It's a little bit of a delay from an original plan of starting in the fourth quarter of this year. And we think that 215 is, not all they're going to need. They may have to double that or triple that in order to meet all their requirements for fielding. But we think that, adding what could be 20 to 40 million a year onto our test business, which currently runs at 70 to 75 or 80 million a year, will fundamentally change the financials down there. So in that business. So I think, if you look back at our results, we did some cleanup operations, took an EAC adjustment in the second quarter. That combined with the radio test prospects going forward, I think puts us in a pretty good position to see some prosperity out of our test business, much more so than what we've seen in the recent past.
Definitely. I'd like to just briefly turn to the audience if there's any questions. Otherwise, I'll just continue. You received a favorable legal ruling earlier this year on your patent dispute. Maybe you could just talk about that and kind of what's left potentially and what was at risk.
Okay, how much time do we have? This is a long-running legal dispute that we've had with Lufthansa Technik. It has to do with a technology that dispute in our in-flight entertainment product area. It's been going on since like 2010, and it's been kind of a war fought in 4 countries: U.S., France, U.K., and Germany. It started in the U.S. really, and we were successful there many years ago getting the patent annulled. Basically, the patent court found that there was nothing novel about the patent that Lufthansa had, and they dismissed it, and case over, we win. In France, we had a similar experience. The lower court annulled the patent, but on review, the high court has asked the lower court to reconsider a couple things that, I guess they felt were improperly or inadequately addressed. So that contest is going to continue later in 2026. And if that lower court maintains that the patent is immaterial or should be annulled, then the case is over there too. If it not, then it's going to spin into a damages phase and will go into its own orbit for a couple years. Germany, the patent was found to be partially dismissed, partially upheld. Germany's been very quiet, waiting to see what happens in the UK, we believe. And in the UK, the crux of your question, the patent was fully upheld, and we had a damages hearing last fall, and our legal team over there had advised or told us we would be found infringing. I mean, the patent's good, we're going to be infringing. And they expected damages to be in the $10 to $15 million range. We booked a number accordingly. After the hearing, though, they were much more concerned about the potential outcome. Lufthansa went into that damages hearing asking for $110 million, as opposed to our $10 to $15 million. And we were told that it's possible the court may lean that way based on some of the feedback they were getting from the court. So we went out and did some financing to accommodate a penalty at the high end of that range because we needed to be able to pay it if the court went that way. Long story short, a couple months later, the ruling came in and it was for $12.5 million. It was right in the middle of the range that our lawyers told us originally to prepare for. So in a sense, we won, but we had done this financing. So today, our balance sheet is by hook or by crook, much more comfortable, and compared to what it had been through most of the pandemic, we find ourselves in a much stronger financial position. We've got a convertible bond out there that's significantly in the money for investors, which we're going to have to deal with at some point, but we got another 4 years to think about that. In the meanwhile, we've got at the same time a $200 million ABL on our balance sheet that we have nothing drawn on. So we're relatively liquid, relatively comfortable compared to anything we've seen since like 2019, which is good.
Excellent. Thank you, Pete. That was a great overview, and we're excited about Astronics, and we look forward to having you back next year. So thank you.
Thank you. Hopefully in person.
Yes.
Investors should carefully consider the investment objectives, risks, charges, and expenses of the ETF before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 800 Gabelli or visit www.gabelli.com. Risks to the ETF include a downturn in commercial air travel, production and/or supply chain disruptions, decreases in defense spending, subcontractor financial health, and competition and/or technology changes.